Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the ETFs. Okay, so we're going to look at the bull and the bear ETF for the S&P 500, for the NASDAQ, for the Triple Q, for the Dow Jones Industrial Average, for the Russell 2000, and then we're going to look at the financials and then the biotechs. Okay, so first up is NASDAQ. Okay, so this is SQQQ. This is the Ultra Pro short Triple Q. So this is betting on the NASDAQ dropping, right? And so as NASDAQ's been dropping, SQQ has been rising. And now it took a while to set up. It must have been because of the options. It just went. They took it sideways heading into that triple witching Friday there. Notice the declining volume pattern, and then boom, big volume today with the break above the middle Bollinger Band. And so now that's the key level to hold. Basically 1626 here. If it can stay above the dotted line, then a new uptrend can begin, similar to back here in the first week of February when there was a close above and then it headed higher. This was the first close above the middle Bollinger Band since back here in February. So this signals the possible start of a new uptrend. If it does pull back below that middle Bollinger Band, there is an unfilled gap down between high of day yesterday and low of day today. Notice how the pink line is crossing over the lime line. That is an early reversal signal. That's the first time the pink line has been above the lime line since back here in the second week of February. So this is all signals that the chart is heating up. Check out the dots here. This is parabolic SAR, and so when the share price breaks this level, the 1696 level, that the dots are going to flip below the candles, and so that signals the possible start of a new uptrend, similar to over here where the dots were above and then they flipped below, and that sparked this, or didn't spark, but it was one of the indicators that signaled the uptrend was starting. And so if this middle Bollinger Band turns into support, the next key level to break is going to be the 50-day simple moving average at 1743. That's always a tough level to break. As you can see back here on the 5th of February, there was a close above and then it pulled back below. And so, yeah, so going forward, if 1626 holds, 1743 is the key level to break. If it drops below 1626, then look for a possible drop down to 1550 to fill the gap. Okay, look at TQQQ. Okay, so this is Ultra Pro Triple Q, and so this is when NASDAQ is heading higher, TQQ heads higher as well, QQQ. And so check out how it's been down 5 days in a row. 5 days down and rebound is a good bounce play setup. Once anything is down more than 5 days in a row, it becomes very overextended and it's set up for a technical bounce. As you can see, there was an intraday bounce off of the 50-day simple moving average. That's the green line, just like back here on the first trading day of March. And so bulls want to see that level hold. It's currently at 165. So above 165 signals that it could have a technical bounce, and then you're looking for a run back up to the middle Bollinger Band at 170, the 170.73. The big risk is if the middle Bollinger Band turns into resistance, a new downtrend could begin. So it has to get back above that middle Bollinger Band, and then here you can see the unfilled gap. A run up to 177 would fill that gap, 177.50. And so if there is a drop below the 50-day simple moving average, that would be a bearish change in trend. Notice how it held here in March. And then that would put the lower Bollinger Band and the 100-day simple moving average on deck, 154 and 150. Similar to here, back in February, the green line failed to hold, and notice how it dropped down to the yellow line, and it even hit the red line, the 200-day simple moving average. So, I mean, that is what people are talking about is a potential retest of the lows from February, and what they're talking about for TQQQ is dropping all the way down to 122.50, down to that zone. So that would be a monster drop from here. Right now, the chart's trying to hang on to this bullish uptrend. If it can hold on to the 50-day simple moving average, get back above the Bollinger Band, then this uptrend could continue. If both levels turn into resistance, that will signal the start of a new downtrend. Okay, let's look at SDOW. This is ProShares Ultra Pro short Dow 30. So this is shorting Dow, the Dow Jones Industrial Average, and as you can see here, Notice how there was a symmetrical triangle pattern had formed. You have ascending support, and then you have so you have ascending support, and then you have descending resistance. And then notice today there was a close above the red descending resistance line. If that level can turn into support, if it can stay above 1850, that would be very bullish. The next key level to break is the closing price here in March. It looks like yeah, at just above 19. If it can get above that, then the 100-day simple moving average at 1968 will be the target. That's the next target if it can get above 19. If it pulls back below 1850, then it's going to be back in the symmetrical triangle pattern. It failed to break out above, and then this pattern will keep working itself out. The middle Bollinger Band at 1809 is the key level to hold, along with the 50-day simple moving average at 1753 or 83 to keep the uptrend intact. Notice how those levels held last week, and then it pushed higher. As long as candles are forming above the 50-day simple moving average in the middle Bollinger Band, it signals more upside potential for SDOW. Now, if it closes below, that's when you could get the lower Bollinger Band tested and the ascending support line. Okay, so going forward, when you have a symmetrical triangle pattern, if there's a break out of the through the red descending resistance line, many times that leads to a breakout higher, you know, and then you could see it retrace up to the recent high close and possibly higher. Or if it breaks below the descending or ascending support line, that if it breaks below that many times signals a breakdown lower, and then you could see the recent low close tested and possibly a breakout lower from there. And so right now we're at that what we call flex point. It's where a move is imminent on the charts, where it's either going to break out or break down here very soon. And so it looks like it's trying to break out to the upside, but is this going to turn into a head fake? We will know by whether or not that red descending resistance line turns into support or not. Okay, let's look at UDOW. Okay, so this is Ultra Pro Dow 30. So this is, you know, this heads higher when the Dow is heading higher. And so as you can see here, it's been under pressure. And notice how the descending or ascending support line, you know, was broken today slightly. Notice there's a close below. So it needs to get back above that level and then get above get back above that level, get above the 100-day simple moving average, and then get back above the middle Bollinger Band in order to get a reversal going. So it has a little bit of work to do. You know, it dropped below the gold line, which is the 100-day simple moving average, currently at 92.97, basically 93, and so that was a big support level to hold. Okay, so breaking it and then now breaking that ascending support line is a red flag. It is signaling that this could break down to the downside, and that would put the low close on deck, which would be way down here at 83, and so that's the downside risk is 83, and then possibly the 200-day simple moving average at 79. Now if it can break above that middle Bollinger Band, get back above the 100-day simple moving average, then it has to break the descending resistance line. Okay, it has to get above this line here, and if that happens, then it puts that 50-day simple moving average on deck. There's a lot of work to do to get through this resistance to the upside, and there's not very much support holding below. So this is a really fragile area for the Dow Jones Industrial Average. If you look at the Dow Jones Industrial Average chart, it looks very similar to this, and it broke below the bottom of the symmetrical triangle pattern. In our chat today in the premium channel, I posted lots of information on symmetrical triangles, so if you'd like to learn more about that, please come check out our chat. And yeah, and so if you look at SPXS here, this is short S&P 500. You could see here it's been heating up. Now RSI is above 50, FASDO is above 50. If they can both stay above 50, it'll be a signal that the chart is ready to head higher. And then notice how it closed above the 50-day simple moving average and the middle Bollinger Band today. You know, they really held this back last week. You know, like you know, they were just not letting those calls pay off. You know, they didn't want to hit that 27 strike. At least that's what it felt like to me. You know, being you know, in the 27 strike, I was you know, looking for that to get hit, and it didn't. But today was the big payday. It paid off, and it broke out above. So that was great to see. And then yeah, you can see it's above that 50-day simple moving average in the middle Bollinger Band. If it can turn those levels into support, that would be very, very bullish. It's gonna you know, possibly start a new uptrend if those levels hold, you have the 100-day simple moving average at 29.55 as the next target if support holds. If it drops below the 50-day simple moving average in the middle Bollinger Band, if it fails to hold that 27 support level, that will signal more consolidation. It needs to stay above 27 to be a good play with this setup. Okay, let's look at SPXL. So yeah, so this has been pulling back why SPXS has been heading higher, and yeah, this is once again testing that ascending support line, and so if that level breaks, that's going to be a major red flag on the chart. It needs to hold. It's testing that and the 100-day simple moving average at 44.61. Notice how both those levels are converging right now. Major support level. All right, so if it holds, then it could get a bounce. It has to get above the middle Bollinger Band at 46. It has to get above the 50-day simple moving average around 47.50, and then it has to break above the descending resistance line. So it's got some work to do to break through resistance. Notice how it's trading below EMA's 4 and 8. That's another simple way to be able to tell whether or not, if all these moving averages and all this information is really confusing, it's just too much, then just look at EMA 4. Okay, the pink line, and if the candles are above, it's bullish, and if they're below, like how they drop below right here, then they're bearish. Okay, and so it means downtrend. Okay, and so SPXL, it has to get above 46.29 to start heading higher again. As long as it's below, that's signaling downside risk. Okay, so that's a really simple way if everything is kind of overloaded with information. Notice how when it was dropping, okay, all the candles are below the pink line, and then when it reversed, okay, they got above the pink line, right? And so when they're heading higher, they're above the pink line, and then when they break below, they head lower. And so that's a simple way to do it, just to try to filter out some of the noise from me putting out too much information. Okay, let's look at TZA here. Okay, so yeah, this is the small cap bear 3 times. And as you can see here, it had been on a nice run. It took a pause on Friday, and then today it ran up to that middle Bollinger Band and hit resistance and pulled back. It has to break 1144. If it fails to get above the middle Bollinger Band, it's still in a downtrend. It pulled all the way back below EMA 13 at 1112. That's the next key level to break. It needs to close above 1112. It needs to stay above 11. A drop below 11 will be a red flag. Notice EMA 4 here is at 1092. You don't want to see, if you're a bull, close below that level and it turn into support or resistance, because that would put the low down here again on deck. It needs to stay above EMA 4 to be a good play. It's trying to hang in there. If it can get back above the middle Bollinger Band and then above the green line, the 50-day simple moving average, that's when it could get moving, and then could possibly run up to that 100-day simple moving average. Keep in mind, small caps are where a lot of people are headed right now. The theory is that's going to be, that segment of the market is going to be least affected by the tariffs, and so people are loading the small caps, and so Russell 2000 has the bulls are still strong. Okay, so it had the best bounce of all the indices today, so it was the strongest, and so it just shows you that people are buying the small caps right now. That's where fund managers are trying to game this right now. I'm not sure if that's going to work out for them or how that's going to play out, but today you can see on TNA, this is the small cap bull 3 times. Check out the long lower wick on today's candle. You can see that big bounce. It bounced off the 100-day simple moving average support zone at 70, and then off the middle Bollinger Band and 50-day simple moving average at 72. And so that was a really big bounce off that middle Bollinger Band. Keep in mind, that's the reload level. As long as the middle Bollinger Band's holding, the uptrend's attacked, especially when the candles are above the middle Bollinger Band and the 50-day simple moving average. This chart is still in a strong uptrend. Once it closes below both those levels, that's when it'll be breaking down. And then once it gets below the 100-day simple moving average, the Dow Jones Industrial Average chart is much more bearish. I mean, look how this is below. It never even got above the 50-day simple moving average. It's below the middle Bollinger Band. Now it's below the 100-day simple moving average and below ascending support. Now look at TNA. I mean, it's still above the 50-day simple moving average. I mean, this is by far the strongest of the indices. So be careful trying to short TZA. I know that we've been trading it. We've been playing back and forth, but you have to be on it. And you have to really follow the charts because this is the strongest so far. Now, if this breaks down, that could be a major red flag for the markets because it's been holding up, and that's where people are trying to find a place to hide right now. Yeah, because you can see here with the UDOW how it's below the green line, and then look at TNA. I mean, it's way far away. The green line's way down here at 68. So it's been much stronger. Yeah, so let's look at FAS. Just a couple more to finish up with. This is the financial bear 3 times, and so it's been heating up as well. It's right there. This is kind of similar to the TZA chart, except for it did close above EMA 13 today. So 1040 is the key level to hold. And then it needs to break that middle Bollinger Band, basically the 1050 resistance zone. That's the dotted purple line. And then it hit the 50-day simple moving average. That's the green line. Once it gets above both levels and turns them into support, that's when it can break out higher. I tried to do that in March and failed, but back here in February, it had a really nice run up to that 100-day simple moving average. That's the upside target. If the markets do break down and they do go to retest the lows, we'll be looking to ride the inverse ETFs like FAZ up to the 100-day simple moving average. That's going to be the target for us if they break above that 50-day simple moving average and the markets stay bearish. If the markets react positively to the FOMC meeting on Wednesday and they take off, then we'll be rocking out the bull ETFs. We could care less whether it goes up or down. We just want to be on the right side of the trade. Okay, let's look at FAS. This is the financial bull 3 times, and so as you can see here, the bull is below the middle Bollinger Band and the 50-day simple moving average, and so it needs to get above both levels. If the 50-day simple moving average at 72.57 turns into resistance, that's going to be a major red flag. And if the middle Bollinger Band turns into resistance, it could start a new downtrend. Similar to back here in February, notice the close below the middle Bollinger Band, it got all bearish, and so you want to see this type of move right here. If you're a bank bull, a financial bull, you want to see a bounce. Now notice it bounced off the 100-day simple moving average each time before. So the odds are if that 50-day simple moving average turns into resistance, it's gonna test 68, and so it has to hold that level. You're gonna know that the banks are broken, the charts are broken if 68 fails to hold. If that breaks, then you could see the big drop down to 60 and that 200-day simple moving average. Notice the long lower wick. I mean, when people talk about retesting the February lows, when they're talking about the banks, they're talking about FAS hitting down here at 57, and so right now we're looking at 71. That's a big time drop, so keep that in mind. Yeah, this could go either way. It's right there on the charts. There's just so much going on right now. It just pays to be following the technicals. If you look at LABD right now, this is the biotech bear 3 times. Now this has been on one heck of a run. This has been one of the strongest places to be if you're looking to short the market right now, or if you had been, right? This is the strongest place to be last week, and it followed through on Monday. And so our theory is if you're up on a Friday and then you're running the week before and then you're up on a Monday, what usually happens is that it's a red Tuesday, and so notice red Tuesday, and then notice red Tuesday. So yeah, that happens a lot if you're up on if you're green on a Friday and then you're up on a Monday. Many times you're red on a Tuesday. That's a pattern that we've noticed. And so yeah, tomorrow there's a good chance that LABD takes a breather. It would be amazing if this had 6 white candles in a row, 6 green volume bars in a row. I mean, that's super bearish for the biotechs. This is shorting the biotech sector. Okay, so they are under pressure. This could be the Trump and the cracking down on price gouging for prescription drugs. So you will know if this is going to get really ugly for the biotechs if this level breaks, the 50-day simple moving average at 343. Right now, it's not looking good. If the middle Bollinger Band at 316 turns into support, a new uptrend could begin. Now, in March, it got above that level and dropped back below, and that was a red flag. So if there's another white candle tomorrow, that would be a bullish change in trend. And then once that green line, there's a close above, that would be a big clue that, like, okay, the bears are really attacking and they've got some momentum, and that's when it could run up to that 100-day simple moving average. So keep an eye on the biotech bear. We're going to see what happens here at this key level on the chart. And so if let's say LABD does cool down, then LABU, the biotech bull, could have a nice bounce. Okay, anytime, like I said before, you get the 5 red candles in a row, that starts getting the bounce player in me wanting to take a look at this. You know, that just sets up a technical bounce. It doesn't mean that all of a sudden, like, yeah, all right, biotech's freaking rocking now. It just means that this is an oversold condition and that it's set up for a technical bounce. Now, it's only going to be back in action if it can get back above that middle Bollinger Band at 97.23. It could bounce from 92, run all up to 97.50, hit resistance and fail to break and still continue lower. And so it could just get a technical bounce. If it fails to get back above that 50-day simple moving average, it turns into resistance. That'll be a major red flag. When it got below that level in March, it quickly, right away, got back above. Notice how it got below the 50-day simple moving average, quickly got right back above. Okay, so you know, if this gets, you know, this is below right now. If it fails to get back above, that's going to be your big clue that the biotech bear is very strong. Now, you know, if it does get back above, and if the markets do heat back up again, you know, this could make a nice bounce play since it's been beaten down so hard. So yeah, keep an eye on the key levels on the charts. This is when it really pays to follow the charts and know your you know, and be disciplined and to you know, take a breakdown on a 15-minute chart very seriously, because yeah, the market's swinging very fast in both directions. So just try to stay on the right side of the trade. If you'd like to learn more about charts and technical analysis, come check out our chat. I'll post a link below the YouTube video. Thank you.